Hello everyone. Hello AREAA National. This is Conan. I'm up here in the Boston area, and today's webinar is creating private wealth relationships and capturing the next generation of clients. When wealth management firms look for loan officers to refer to the high net worth clients, they're looking for a trusted and competent lender with expertise in this subject. In today's competitive real estate and mortgage landscape, understanding the intricacies of serving clients with private wealth is crucial for fostering strong relationships and delivering exceptional service. AREAA Mortgage is excited to bring you this webinar, creating the private wealth relationship. We're going to talk about tailoring and equipping our realtors and mortgage lenders with the tools and strategies necessary to navigate the world of private wealth and provide their affluent clientele with the highest level of support. Our three speakers here, represent a major bank and bring years of experience and success to share with you. First, we have Jennifer from Wells Fargo. She's got 20 years of experience. Currently, private wealth banker. James Chu from US Bank, area manager with 31 years of experience. And we also have Megan from Chase Bank, 5 years in the industry, senior loan officer. So welcome you guys.
Thank you.
Thank you.
So, private wealth is a different mortgage, or a different class of people. So Jen, first question up to you. How do you classify a private client, and how are their expectations different from other clients?
I think that when you're classifying a private wealth client, I mean, even at Wells Fargo, I think there's a few different categories that we segment. So let's say $1 million and down, our banking and brokerage relationship, really most any balance, but under $1 million, then we have our private banking level that's usually at 10 million and up, and then you have your ultra high net worth. From the mortgage banking side, we have asset-based relationship discounts that start at 250,000. So I think the definition of that can be a bit broad and wide-reaching, but we can help quite a bit of clients. I think from expectation standpoints, I generally find that if a client has their monies, and a lot of their monies with a financial institution, they're going to expect a high level of service. And I think that's with any service. So let's say you have a client that's in the luxury space, right? There's just, I would even argue, like a white glove level of service, right? So they're looking for expedient communication, going beyond just your regular delivery of service, going above and beyond. So I would say there is a higher level of service and expectation with working with that clientele for sure.
Great. James, Megan, how would you classify a private client as well, on top of what Jennifer had just stated?
Yeah. So here at Chase, our Chase private client is anyone that has 150,000 on deposits with Chase. Now, like Jen mentioned, there are different tiers that kind of categorize, whether that client receives certain pricing discounts and whatnot. Our tiers are a little bit more loan size based, so it kind of differs from person to person. But typically, if a client has anything over 500,000 with us, they get an automatic 1/8 of a discount. And I also work with a lot of the private bank clients that are at, on the JP Morgan side as well. And that typically is clients with 5 million and up.
Excellent.
And at US Bank, we're $1 million liquid asset, $3 million total asset to qualify for private wealth. We also have the high ultra net worth individuals that 75 plus millions and plus. Anything that's under the $3 million liquid asset, total asset, which it could include the $1 million must be liquid, the $3 million total asset, which also includes equity on homes and everything else. So they got to meet those criteria to qualify for any of the U.S. Bank private wealth clients. In terms of setting the expectation, look, again, these individuals are basically, coming in looking to move assets over to U.S. Bank. So we pretty much have to treat these individuals with white gloves, make sure that we deliver the service, what we promise, and at the end of the day, they're expecting service that, for us to deliver service that they're expecting.
Excellent, excellent. Great. Megan, what are the key factors that mortgage lenders consider when assessing a private wealth client's application?
Yeah. So anytime I talk to a client that would be considered, private client, high net worth, I first off like to bring in the other banking partners that client already does work with. So JP Morgan Chase, I find that most clients have some sort of relationship with us already, even if it's, just a simple savings account or a credit card. But we offer a whole suite of products, right? So, if they're already working with a financial advisor, I like to speak with them just so I get a full picture of the client's background before I speak with them, just as we mentioned, to give that white glove service. I don't want to have to ask them the same questions if they already have a great relationship with us. Some of the things that we look at is, of course, their assets that they may have with us already and what assets they may have outside of JP Morgan Chase as well. And if there's any opportunity for us there to bring over some of those funds, or, if they're self-employed, some of their business accounts, just want to explore and make sure we cover every aspect of their overall portfolio. And just like any other client, we're still going to be looking at, what are their debt to income ratios, where is their income derived from? Sometimes we may not need to use some of their actual income. There's different products and that are available for clients of a high net worth to use their assets as a form of income. And I think we're going to talk about that later. But we kind of look at everything. And there's usually a bit of flexibility with that type of client when it comes to, making exceptions, higher loan amounts you typically see, things like that.
Yeah, that's amazing. Jennifer, what are some of the factors there for private wealth applications?
So I would agree with everything that she just said. When looking at an application, I like to take a holistic approach when I'm doing mortgage planning, and often that involves having conversations with the client's advisors or bankers that they may already have an existing relationship. I think there's a great sense of, me and you should know me, right? And so kind of like to what her point was, that you don't want to be replicating information that you should know. And if a client has maybe, it's always good to know the lay of the landscape ahead of time. There's particulars, but depending on the client's depth of relationship, there's relationship-based discounts. There's single loan exceptions that we may be able to do. It ranges from loan amounts to cash out to property types, pre-sale, etc. So there's a wide range of things that we can consider in that space.
Excellent. And James, what are some of the items, the key factors for your private wealth applications?
It's pretty much the same thing both Jennifer and Megan touch on. So again, I think the most important thing is just assessing what the customer's needs are. And again, majority of people, especially on the private wealth side, we're looking at low amounts. So our private wealth guidelines have expanded guidelines that allows higher low amount, lower LTVs. So again, it all depends on what the customer's needs are, what we need to kind of put them through. And, again, assessing their application, again, the first thing they have to do is qualify. So we got to make sure that they do qualify, they meet the criteria. If they meet the criteria, then we'll be able to kind of provide them with a lot of information to them to kind of meet their needs.
tax returns, documentation, bank statements, all that.
Oh, yeah, well, unfortunately, well, not unfortunately,
Not
but on private
required, not
wealth,
required, but
we treat a little bit differently. We are looking for 3 years of tax return here at US Bank.
yeah,
We do run the Bucher system, so we're looking at cash flow. So we're not just looking at your regular qualification in terms of ratio. We do look for the cash flow. So we do run up the Buchers, and from their cash flow, we look at we review based on cash flow analysis, and we also review based on assets, right? At the end of the day, if somebody has a tremendous amount of asset, doesn't really have the cash flow, we will also basically do a liquidity test to make sure that they could qualify and basically, sustain holding, qualifying, paying for the mortgage.
got it. Yeah. Yeah. It's important to, if all the realtors out there, if you have, if you think your client qualifies as, private client, definitely reach out to your regional, to your regional lender, and try to get qualified, because there's huge benefits, especially with the savings on the interest rates. That's kind of where it looks. And on top of that, James, what are the challenges that private wealth clients face when obtaining a mortgage?
Looking for documentation in terms of the 3 years tax return, right? Like I mentioned earlier, we do want all K1s. So again, we don't need business tax return if they don't own more than 25% of the business. So that's kind of the same as, any other regular mortgage qualification, but we do need 3 years of tax return to evaluate the cash flow. So again, that's kind of some what we face in terms of challenges, because again, typically in terms of qualification, we're looking for 2 years of history. For a private wealth client at US Bank, we are looking for 3 years history.
Got it. Jen, what are some of the challenges that you face when obtaining a mortgage?
I would definitely agree with James when it comes to that income front. I think often, the clientele may find or identify a property, and often they're looking for investments, and things may come up very quickly. And so trying to perform with speed, often clients, private wealth clients have very, complex financial profiles. They might have several business holdings, property, and so the document gathering process can be challenging in a very condensed timeline. So I think that if you get in with, their business managers, the CPAs, bookkeepers, or whoever is in their circle that can help with that, I will say that can be a significant lift when it comes to that. I had a client that had 200 K1s once. And he was trying to scan everything to me, and I said, you need to step away from the FedEx and give me your CPA's number. I don't even know why he was doing that. But that way, we can try to deliver, underwriting reviews as quickly as possible. So.
And at the same time, you want to try to make it as easy as possible for your customers. The
Yes.
service that you're providing, right? A CPA
Yes.
number. Oh, absolutely, right.
Yeah, I mean, we can all agree that when you're buying a property, or when you're in a really compressed timeline to make a move like that, it feels like a full-time job. So our clients are busy doing other things, and they can't pull together thousands of pages of tax returns in a short amount of time. So that can be quite challenging when working with clients this way.
Yes, especially on the tax returns. You look, there are companies that they don't even know that they don't even remember these companies that they're running to. So
Right. Well, and if I may add to that, actually, you brought up a good point. So regarding tax returns, so I think that from a tax planning strategy, often CPAs will have clients may have different entities that they have interest in, but because of the way that taxes are filed, on the surface, it may look like the client doesn't qualify. And so I've had clients come to me from other lenders and say, oh, my debt to income, my income is showing negative, but really it was a very strategic move. And going back to that cash flow analysis, there are ways that we can add back income that the IRS considers a deduction. So somebody like that may actually qualify versus being turned down by another lender. So being able to identify those areas on the tax returns that we can add back and increase qualifying income.
yeah, great, Megan. I mean, what are some of the challenges that you face as well?
Yeah, I mean, I think Jen and James kind of hit the nail on the head, but same thing, just a lot of hands in the pot. Typically, when it comes to a client with a large portfolio, I think all the reasons that we mentioned is important why a client should work with someone that has experience working with high net worth clients. Jen just mentioned the different things that she sees on tax returns. I don't think that anyone would know to look out for those things unless they do work at a lender that has a private client group and has those type of clients that you would see that with. I also, anytime I have a client, they're usually not so much involved a lot of times in the way that their taxes are filed and the way that they do show income. So, I do often reach out to their CPAs right off the bat and get on the phone with them and just say, hey, run me through what I need to know, because a lot of the times, the clients are removed from it. So that's that whole communication with who they work with, their accountants, CPAs, sometimes their personal attorneys, makes the whole process a lot smoother.
Awesome. Yeah, that's great information. Jen, how can private wealth clients best prepare for the mortgage lending process?
So going back to what I was talking about, taking a holistic approach to mortgage planning, for a lot of the partners that I work with, they do annual and biannual reviews for clients. So if you know that a client has a relationship with financial advisor, private banker, it would be good to kind of understand what the year may be looking like. So, they'll review, do they have any liquidity, cash needs? Are they going to be helping, family buy property? Are they going to be downsizing, selling? And so then once we kind of get a sense of what that looks like, we can take the necessary steps to maybe prepare a pre-approval. I typically like to have my clients fully underwritten, and clients, especially in this space, when there's complexity involved, you definitely want to tackle all the obstacles before you even get in the contract. So you're going to be able to have confidence you can perform with speed. And then also from the other side of things, the financial advisory partners may have some additional ideas where you could potentially leverage securities-based lending, which is basically, let's say a client has a brokerage account. There's ways that they can borrow against this line of credit. I've had many clients utilize something like this as a form of down payment, and maybe not have to sell another property in a contingent situation. Additionally, maybe the client can buy cash and then recoup. So there's, and get their money back out as soon as they close escrow so they can replenish their cash positions. But really getting ahead and planning and having a plan of attack early on is really going to be key.
That's phenomenal. James, what are the best ways that you kind of help prepare your clients?
I think we've been talking about that, right? Connect us with all your financial planners, CPAs. So this we're 100% prepared for them. So this way, number one, we want to make their life easier too, because again, a lot of these information we could access through their professional, and a lot of the private wealth clients, they have access to all their financial planners, CPA that has all their documentation, everything we need, and we can get the files a lot quicker. So again, what we want to try to do is make the process as smooth as possible for our private wealth clients.
Megan, Chase.
Yep. Chase will also underwrite the entire application at a pre-approval stage. So anytime I have a high net worth client or they're self-employed, I specifically try to definitely get it all in and underwritten ahead of time so that we don't run into those hiccups throughout the process and slow anything down. Always want to keep everything within Chase. So we'll sit down with the financial advisors if they have their businesses here. Just keep it all simple.
Excellent. With that, so Megan, how can strategizing with a private wealth partner help the next gen into the real estate market?
So typically when you have a client that is high net worth, you know, there may be, I guess, you know, generational wealth there, and other members of the family that are also under that household. So, you know, making sure that the whole family knows that you are there and available to help them. Your client is not just, it's not done once the mortgage closes. There's more there that you can continue to work with and work on. You know, I find a lot of clients, you know, their children are looking to buy, and some of that asset and down payment does come from the family and the parents, and you may have helped the parents purchase, you know, in the past as well. So just keeping that connection, always following up. You know, high net worth clients also typically have a portfolio of properties in and of themselves that doesn't usually just stop with their primary residence. They're typically also looking to buy second homes and investment properties elsewhere as well. And you know, sometimes those properties, they may have questions about putting properties into an LLC or a trust. And that's, you know, something that your accountant or we can touch on some of it. A lot of it does have to go through our legal team and be reviewed if it is going into an LLC or a trust, but that's something that I often have questions on from a client. Hey, I'm thinking about putting this into an LLC, or hey, I have a trust, some of my money's in the trust, can the trust go on? So those are all things that we'll bring up and speak with the client on as well.
Awesome. Jen, I mean, what are some of your strategies next gen?
So in speaking with a lot of my partners, I mean, they manage money for a living, right? And so they're looking at the whole picture and for the whole family. And the advisors that are the most successful, they're typically looking at making sure that they're planning for not only their clients, but their beneficiaries. I recently heard a statistic that if a client passes away, their beneficiaries, like more than 50% of the money is going to leave. So your partners have a vested interest in wanting to help the next generation get sticky with them, right? Get to know them and help them. And usually the first way to do that is by buying. So going back to that household legacy type relationships, clients may be able to take advantage of that and help their family buy. Additionally, they may be co-signing on the loans, or they are giving them the down payments to do that. So I recently had a couple of transactions with my wealth advisors where the grandkids were purchasing, and they had established legacy relationships very long time ago. And so the client was able to purchase and take advantage of our asset-based discount. At the time, he got a 0.5 point off the rate from the prevailing interest rate environment. So without that, he may not have been able to buy. So now this same buyer, next generation, is going to remember that. And so it's just going to continue to solidify that relationship and so on and so forth.
That's great. And, it's just a referral after another referral,
Right.
having that relationship. James, you're in Jersey. What are the partnerships that you've kind of built upon the next gen?
Well, I think Jennifer touched on that the best, like in terms of having the private wealth partners that are financial advisors that already have the relationship with the family. That again, they're building generation wealth, right? So at the end of the day, I think in terms of what we're able to do, especially on the private wealth management side, we're able to kind of put the property in LLC, title vested in LLC, trust. I think that's kind of all part of financial planning. I personally don't get involved in that. I actually let a lot of the private wealth partners kind of advise them what they want them to do, the attorneys. But at the end of the day, I'm able to kind of provide the service that they need for them to kind of get the property financed the right way and make sure title the property the right way.
Are you guys all connected with an advisor? Jenna,
Yes.
James, at US Bank, Megan at Chase, Jen at Wells Fargo. Do you have
Yeah.
So it's all about relationship, right?
Yeah.
So we have private, we have individual, we have a US Bank private wealth advisors, And pretty much these are the relationship that we have within the bank that we refer to each other. At the end of the day, we also have our own, uh, uh, you know, personal connections that we have built in the past that continue to refer their clients to us. So again, we don't only just at US Bank, we don't only use our US Bank private advisor because again, it's, you know, in terms of private wealth, especially in the East Coast, we're kind of new. So at the end of the day, we're building this thing out. So again, we don't have a lot of existing legacy clients like both Jennifer and Megan have, but we do have a lot of relationships we have built in the past that we continue to refer these customers to us.
I think Megan, you were gonna add on as well.
Yeah, we have, there's a decent number of advisors that I work with between Chase and also some for the ultra high net worth through the JP Morgan private bank that I work with. And, you know, it's not a single person that I refer everyone to. I think it's important to find someone that, you know, has just good connection with the client themselves. So if they don't already work with a financial advisor, you know, I might speak with a few of the partners that I work with and here's the scenario and see, you know, who might be the best introduction for that specific client and what their needs are.
Jen, did you add on or?
Right. So at Wells Fargo, I mean, I'm going on 15 years, so I've had a wide range of partners that I've worked with, from bankers, private bankers, relationship, business, et cetera. So internally, enterprise-wise at Wells Fargo, and then also external partners as well, that will, you know, send over clients and vice versa. We've been, you know, developing partnerships, and it's really when you work with a clientele, this group, the relationship of trust is going to be pretty heavy. So you really need to be able to trust each other that you're going to take care of the client. And I think setting expectations, you know, nothing's going to be perfect, but I think that if you're getting ahead of those and still navigating to where you can get to the finish line and produce results, is going to continue to just help foster and develop those relationships.
Absolutely true. Yeah. James, how has recent changes in the mortgage market affected the lending process?
I love this question.
There's
There's a lot of
good
changes,
and bad, right? I mean,
so
there's a lot of changes that's kind of going on, and you know.
yeah, there's a lot of changes again in terms of every bank's appetite for, you know, the different type of especially portfolio lending. Again, our private wealth mortgage is really portfolio lending. You know, again, I think it kind of brings some challenges, but it also gives us some opportunities, right? So at the end of the day, we're kind of we're leveraging everything that we have. You know, again, with private wealth at US Bank, we do construction perms, right? So we do land loan, we do all different type of product that I can actually put into our private wealth product. So that's kind of gives me a little more advantage, and it's also pricing. So again, at the end of the day, the challenges we have these days is really pricing, right? So at private wealth, I'm able to kind of, if the borrower's willing to move assets, I'm able to kind of go through competitive price match to kind of meet some of the market demands or competitiveness that is out in the marketplace, kind of bring me a little bit closer to the rest of the market. And if I need to compete for the clients because we're building a relationship, we're bringing assets over to the bank, guess what? We're able to do that with private wealth. So again, as much as it's challenging, I think it's also a great opportunity because at the end of the day, it's all about relationship building.
Megan, what are some of the you know, changes in the mortgage market that affected the lending process on your side?
I mean, I think everyone on here knows interest rates are big topic of conversation these days, probably one of the first things that get brought up. So, you know, relationship pricing is huge. We try to incorporate it every way we can. How can we get this rate somewhere where they're comfortable and want to move forward, right? You know, I've been seeing some clients may find, you know, they may be less interested to put down the minimum. So right during COVID, when rates were 2-3%, they were, everyone wanted as much of a loan amount as they could get because we're never going to see these rates again. And now we're seeing rates a bit higher. They might say, okay, I'm willing, I want to put down a little more to lower that monthly payment. And obviously that differs from everyone's scenario, but it's something that I'm seeing more of compared to a couple years ago, I would say. And, with that, with talking about the interest rates, I think we all have an opportunity to do like long-term rate locks, for example. So to prevent the rates increasing further, we can lock the rate up front for extended periods of time as well.
Great. Jen, what are the, how has it affected you in the mortgage market for your private wealth clients?
So I would say that interest rates, but also inventory has been a huge, or I should say the lack of inventory has hugely impacted the market and the real estate landscape. So I have been finding that there is an increased amount of, like, let's say, cash type transactions, because in order to compete, you're going to want to close quick, close with speed. So with that type of situation, I mentioned previously, a lot of my clients have been utilizing, let's say, a securities-based line where they can go in, those lines, because they're secured by the brokerage account, they can get funded fairly quickly. They can go in, use that, and then maybe go for like a 1 week very short close. As soon as they close, we have the ability to go in and help the client pull back the monies. So not only is a client able to compete in a highly competitive market, they can pull their money out, not having to wait 6 months. They're able to recoup their money right away and potentially get relationship discounts. The asset-based discount is going to be a really key factor for clients coming into the market, whereas maybe someone who wasn't quite eligible for that might still be on the fence. So giving them a competitive advantage, and then also maybe potentially combining that with some of the other programs like our Builder Best, where you can lock for an extended rate and also take advantage of the relationship discounts and be able to do a float down as you get close to closing.
Yeah. So yeah, paying cash up front, and I mean, the cash offer is, it's pretty good, even if it's at asking, above asking, and then recouping that money. Is that similar to what Chase can do as well? And James, to you, U.S. Bank, you pay cash as a client, and then would you get the purchase rate, interest rate, or would it be a refinance interest rate?
It'll be a transactional refi. We call it transactional refinance.
Yeah.
So as
Yeah.
soon as they close, I think it's within a 6-month period, we still consider them as transactional refinance. Again, the challenges in the market, again, I think all of us are going through challenges where guidelines are changing throughout the industry, right? So as, liquidity start to tighten up, as everything starts to tighten up, different banks have different guidelines that are changing. The good thing is on our private wealth, we really haven't changed it. Kind of the guideline remained pretty the same. We're pretty aggressive. I think we go up to 60% loan to value, up to $10 million. So in terms of, and then, of course, we go to 80% up to 3 million. So these guidelines has not changed much. So again, I think that's, like I say, even though it's a challenge, but it could not be a challenge. It could be an opportunity for a lot of us. So again, the 80% loan to value, yeah, we'll go up to 2 million, 75 to 3 million, 70% to $3 million, 70% to $5 million. So again, those guidelines are kind of set in stone. They haven't changed for us. I don't know if it's going to change in the future, but at least right now, we're able to kind of finance based on these expanded guidelines.
If I can just chime in on that as well too, definitely like the industry, especially around portfolio lending, there has definitely been some tightening. But I think that for these clients that have assets under management with the banks, there would definitely be, even though that there may be higher risk with, maybe higher debt to income or the loan to value changes, these are things that, while it might be a potential higher risk, can be mitigated by the fact that the client has a significant relationship with the bank. So definitely creates an additional opportunity, challenges, but also an opportunity.
On that note, Jen, what are the different types of mortgages programs available to the private wealth clients?
So, I mean, we have our full product offerings between obviously fixed and adjustable products. I find that a lot of clients are in the space may be interested in interest only type products, and interest only, it's not for everybody. We also offer an interest only product that's fixed. So often clients are looking to have a payment that's very manageable, but your really sophisticated clients are looking to deploy this cash and putting it into other positions so that way they can get better returns on their investments and whatnot. So I think that this is, again, for this type of product with an interest only, you may see industry wide where there's some higher qualifying standards for it, greater reserve requirement, but this is something that's would be of interest to a potential client like that. While not a mortgage product per se, it's also kind of a combination of like security-based lending as well that somebody may utilize to transact as well.
Great, Jen. Megan, what are some of the programs within Chase?
We also have those interest only loans as well. Same thing. It's from a bank's perspective, a little more riskier. So their reserve requirements may be a little bit higher. Their debt to income ratios typically need to be a little bit lower. We also have, I think we mentioned it earlier, but a client that has significant assets and typically they are self-employed and might have, so their tax returns might just kind of be very lengthy, many of them. So to get around that, we have a program that is essentially like an asset depletion program where the client has to have over $1 million in assets and usually 3.5 times the loan amount that they're looking to borrow, and we'll calculate out what that a form of income to use so that we don't need to request the 1 million pages of the tax returns and the K-1s and all of that. So that just kind of speeds up the process overall, way less documentation. And so that's a good option if you are working with a high net worth client that has significant assets in their name.
James, what do you got as far as
Pretty much the same. I think we all have the same product, right? Fixed, ARM, interest only, construction perm, and lot loan. So that's what US Bank will offer in our private wealth management suite.
Great. Megan, what ways can you strategize with private wealth partners to enhance or grow your business? Whether it's growing your business with a referral partner, a realtor, or a CPA, an advisor.
So I personally think it's always beneficial to try to use your network and your centers of influence. So something that I try to do is I'll work with my financial advisors because they have a whole book of clients that they work with and say, okay, this type of introduction would be beneficial for me and hopefully for both of us in the end. So, I often ask, hey, do you have any clients that you work with that are in real estate? Do you have any attorneys? Do you have any CPAs that you work with? Because all of those, types of clients also work with their own book of clients. So just getting as many introductions as I can and utilizing their books and their clients as well, and trying to find opportunities there. Trying to think of other things. I also, anytime that if I'm in the office and I find some of my partners are bringing in a client and having a meeting with them, we often try to just make an introduction. Maybe it's not something that they have a need for me tomorrow, but it's good to have, so that they know they have an option, they have a person to go to at Chase. So if they're meeting on a quarterly basis, they'll bring me in just to say hi, and this is what I do. And, if the time comes and you ever need me from a financing perspective, they know that I'm there and they have my contact.
Nice. Jen, what do you use to strategize, to grow your relationships?
I think all of that that Megan mentioned, really partnering and getting the introductions is really key. And I would even say to those in the audience, like the realtors and even other lenders. So when you're speaking to your clients, so for example, like your real estate partners, if your clients are not looking to sell, I know often you're calling them, checking in, ask them for a referral to you're servicing these clients all the time. You can ask for an introduction. That's really key, and it's a warm introduction. um, Having them added to their village, so like their CPAs, their attorneys, their advisors, is going to be really key, because everybody has these clients that they service. You're a part of the village, you just haven't been introduced to each other yet. So as you continue to do that, you will multiply your own referral network. I think that if you don't already have relationships, it's good to maybe get part of local business networking. But as you just continue to grow, ask for those referrals, and with specific partners, be present at those meetings. So I would say all of the above, just to continue to keep your business moving. And I think that by doing that, sometimes I call it recession proofing your business, because often these clients may be making moves regardless of the interest rate environment, and also can weather shifts in the interest rate environment as well. So they're not going to be tiptoeing in and out if the rates tick up a bit. Often they have business decisions that they need to make and move forward with. So.
Great. James, what have you been doing recently for, strategizing your partners?
I think the key word there is partners, right? At the end of the day, they have to be a two-way street. So anytime we talk about partners, you don't only just receive referrals, you also got to give referrals. I think, especially, with financial planners, when they refer us a customer, we typically refer them back. We also uncover opportunities for us to build a relationship. So at the end of the day, we look for different opportunities to kind of refer to each other. So again, networking in terms of, making them partners, it's a two-way street. So again, I think it's important to not only get the referrals, is also to get the referrals out. And then also, we a real estate partner is the same exact thing. We have to refer our business out to our realtors. But again, at the end of the day, if I have a private wealth client, a lot of times they'll talk to me. Oh, my family member's looking to do this. They're looking to sell their home. So again, I try to kind of get these referrals back out to our realtor partners as much as possible. So again, partnership is important. I think that's what 31 in the business, 31 years in the business. I think this is the most important I can say to anybody. It doesn't matter what industry it is. We really just have to, build your network to refer to each other.
Agreed. On that, James, what are some of the trends that you're seeing in the residential mortgage lending market?
Trends.
Trends
In
as
terms
far as
of,
like, I don't know, like open houses, lack of inventory, is multiple
well,
offers. Now, how do we?
I think in terms of the high net worth, especially on the private wealth client,
Yeah.
in terms of, I do see in terms of some of the trends, in terms of what the market, even though it's still a very competitive market, the lack of inventory is definite, kind of is getting to everybody right now. And even the high net worth buying the large homes, the large loan sizes, they're still selling. So at the end of the day, there's still bidding wars, especially on the high end side. That's what I see. Especially, I'm actually on vacation this week on the Jersey Shore. I see all these, homes that are being built right now. Nothing is, everything comes on the market, gets sold pretty quickly. So again, it's just amazing. And at the end of the day, even where the interest rate is at, people are still purchasing at this present time. So again, I'm not seeing a slowdown in terms of the market. I think the lack of inventory is driving that right now.
Jen, what are the trends that you're seeing out in, California and LA?
So inventory, like I said, is going to be a huge driver on the market. So really best position yourself by being able to close with speed. Going back to a previous point that I mentioned, a lot of my clients may be looking at buying cash. I'm seeing an uptick of new construction. So I have quite a bit of new construction that I've done this year. So, just looking for that inventory, and with the interest rate environment, anytime the interest rates dip just a bit, you're seeing, people kind of fled back. So just being prepared. There's really a big pool of highly qualified buyers is just trying to get in. So I would say just getting prepared, getting ahead, being able to perform is really going to be key to try to compete.
Megan, what have you been seeing in the city? Condos, co-ops, the
Yeah.
Hamptons, right?
I mean, I think it's the same, unfortunately, here as well. Lack of inventory in the city specifically. I like how Jen mentioned new development. So in Manhattan and the surrounding boroughs, ton of new development. I'm seeing clients, get in there, and, the sponsors they want them to get in there. So they're offering amazing concessions to get that client in there, that I think is very enticing, because, hey, if you're going to take a higher rate, it hurts a little less if you're getting, $50,000 back at the end of the day. And they oftentimes use that to buy down the rate even further. So that's something that I'm seeing a lot of in the New York City market, particularly.
Mansion tax is a tough one, right?
Yeah, that's a funny one to explain to anyone that's buying, especially if they're from outside of the US. They're like, why? What do you mean it's a mansion tax? I'm buying a 1-bedroom.
Or a studio.
Yeah, or a studio. Yeah.
That's right. Yeah, I mean, anyone in the audience have any questions? Please, put in through the chat. We got this great panel of experts here in the private wealth world, and there's one idea. Sorry. Would you recommend for realtors trying to get high net worth customers to network or build relationships with a wealth management advisor in order to obtain referrals from their high net worth clients?
Absolutely. Go
Go
ahead.
ahead, James. Oh, no, go ahead.
James.
So again, absolutely. I mean, you definitely want your especially being a realtor, you definitely want to, network with financial advisors. At the end of the day, by the way, again, customers come from different aspect of it, right? So, you don't only just get it from, some of our best some of my best realtors are connected with high net worth financial advisors, and they're dealing with high end customers, again, and they're among that network. So again, it's very important for the realtor to be connected with the high net worth financial advisors.
I absolutely agree. Often I find, when I think back on my business, I think that my business has always been pretty balanced. And I think that when I just look at the big picture, it's because I work with clients in life stages. And so a lot of these partners, like they're, advisors and whatnot, they're looking at life stages, and those are going to dictate a lot of the real estate type moves. So I often tell people, you might get introduced to somebody, but I might not even be part of the equation. For example, if you are an advisor and your client died, and now you needed to sell real estate to pay out your beneficiaries, well, I'm not even involved in that, right? But you might call that agent that you've now built a relationship with. And on the flip side, on an example, I had an advisor call me and say, one of my clients passed away, the beneficiaries, all 7, want to buy. So often, unfortunately, after a death, people are waiting though for a windfall of monies to be able to make certain life moves, and one of them is going to be real estate. So it's a mutually benefiting relationship. It's not rate sensitive, and really, like I said, and if you think about in our market too, and I think about a lot of the inventory hitting the market, it's because maybe somebody's deceased, right? Or looking to downsize, or there's some kind of life event that's triggering the real estate transaction. So I think it's really important to get ahead of these. And so that way you're the person that they're looking for.
Megan, do you have anything to add with, like, referrals to or recommendations to, Chase private wealth advisors as well? I mean,
yeah, it never hurts, right? To be to just be a point of contact. I think, selfishly for everyone, being able to, have a private client, high net worth client go to you for recommendations and referrals is key. So, being a realtor and working with a client that says, hey, I have an issue with my account here. Do you have any recommendations? I don't like my current, institution. What institution do you use? Having those connections, just so you can be their go-to and establish even just, a relationship outside of just the deal, is beneficial.
nice. Yeah. I mean, to the audience here, is everyone here connected with in some way to an advisor? That's, that seems to be pretty valuable, especially if you're a realtor. You definitely need to be connected with an advisor, whether it's for informational or just advisory services. You might not have money parked there, but at least have a conversation. I think that's pretty important to talk to with, just to be connected with. Here's another question. Yeah, go ahead.
Oh, I was just going to say, I think that the easiest way to go about that is, first, if you're a realtor, I know that often you might have your preferred lenders, but I think that it would behoove you to have a buddy at every single bank, especially your financial institutions like Wells Fargo or US Bank and Chase, because if you think about your own clients, collectively, there's tens of millions of customers being served by these respective banks. And your clients may miss out on opportunities to have a lower interest rate, expanded guidelines, get financing that they might not be able to qualify for. So I think it's really important to maybe start there by getting to know your local partners and just building that relationship, and then over time maybe getting to know some of those wealth partners. And then additionally, I would say, rather than calling your clients every week and dropping off something and, hey, when are you selling, simply ask for a warm referral to their financial advisor. And if there's a mutual client there, it's not a cold call. So as their clients, have needs, you want to be the person in that Rolodex.
Yeah, exactly. We have a question here to the panelists. In some of the most recent loans that you've closed, or if you had any issues with, has there already been appraisal issues with bidding war properties?
There's always going to be issues, right? At the end of the day, depending on what the market is. At the end of the day, again, in terms of appraisal value, the market is the market, right? It depends on what the buyers are bidding for. Going to be actually, that's also been addressed, I think, in terms of the loan to value, in terms of what people are putting down. A lot of time, even when on the appraisal, even though the borrower's aware of it, they're moving forward with each transaction because they just want the home. So yeah, I mean, of course, there's always issues, but every one of us, in terms of every institution, has its own reconsideration of value. Some homes, if we could submit comparables, we'll be able to kind of get some of them overturned. In terms of what U.S. Bank requirement for New York City, anything under $2 million of low amount, we only need one appraisal. Anywhere else, in California, 2 million, and then 1.5 million, we do anything above 1.5 million, we need 2 appraisals. So again, these values are coming in because, don't forget, appraisal is opinion from an individual that is licensed, right? So it's an opinion. At the end of the day, there's always, if there's additional data, we're able to kind of overcome a lot of those problems.
Yeah, and then, for the audience, if you need to be connecting with an advisor, feel free to reach. Well, first, definitely reach out to your respective markets, and if you need a referral, whether it's in LA, New York, New Jersey, we got James and we have Megan, Jennifer, they'll be more than happy to, send the referrals to, to their local representatives.
I think being part of the AREAA group, right? I mean, networking is everything. So again, I think giving plug to AREAA, one of the reasons why I am, so involved in AREAA is because being able to network everybody, getting the knowledge that we know. So again, at the end of the day, we want to promote. Maybe we should get more focus on getting more financial advisors through AREAA. So again, I think this will be a big plug for all of us to continue to kind of grow this important, this important chapter, right? At the end of the day, we need to kind of grow our organization even further by, maybe adding additional financial advisors to the referring group.
Right. Yeah.
Yeah.
With with AREAA National, yeah, you're definitely right about that. We don't have enough financial advisors, on these panels, and that could be definitely something that we'll look at in the future. And with all your experience and your knowledge, your plethora of knowledge, this is such a great educational piece too. I hope everyone has taken away some knowledge from from this webinar. I mean, James, man, you're amazing. Taking vacation time just to be with us here, and Jennifer, out in LA, and Megan, I think you were traveling earlier too, and just trying
I'm
to get.
not in New York City, but I'm pretending with my background right now.
Yeah.
I apologize. I had like my son running around naked behind me, so
Okay.
thank God it's blurred out.
Yeah. So.
Yeah, if anybody has any questions, feel free to reach out. Anything to add, to conclude the this session here, Jen? Last word.
Yeah, I would just say, to everyone that took the time to be here, I think the whole spirit of this is that, just continuing education. Our world is different than what it has been previously, and you can't do the same things. And I think it's so important to be equipped with you don't have to know everything, but I always say you got to know just enough to be dangerous, right? So if and if you're looking to expand your network and you're talking to your clients, ask them, where do they bank? Where do they have a relationship? And I think that you will see over time that your business will slowly grow by leaning into those type of relationships and not maybe solely just having the one mortgage partner. So again, thank you for everyone just being here and giving us a platform to just share more information about helping more clients.
Thank you. Megan, any final words?
Just thank you for everyone taking the time out of your day. Everyone's busy, and you took an hour to hear from us and learn a little bit about each of our institutions and what we can do. And, I hope to hear from everyone eventually, depending where you all are. Maybe I'll see you at an event here in the city eventually. And it was great speaking with everyone today.
Great. James, final words.
Well, I think in terms of all three of us on this call, we're certified to do private wealth management because we have the experience, we have the know-how, we have done it. But really, any lender, especially throughout any U.S. bank representative, has a connection to any certified loan officer. So at the end of the day, by the way, network with our respective companies, and we want them to come to our local market, and they'll be able to kind of get access to a certified loan officer. Again, it's all connected, right? At the end of the day, we want to make sure that everybody understand that there's resources out there. Their clients, there's all different clients with different needs, right? So again, just because we're certified private wealth, I'm sure Jennifer, Megan, we don't only do private wealth customers too. We have a mix of product, mix of services. And at the end of the day, again, be part of the network and continue to grow your business.
Excellent. Thank you, everybody. This will conclude our today's webinar. And everybody have a great day and a great weekend.
Thank you. Have a good one.
Thank you.
Yep.
Thank
Bye-bye.
you. Bye.